Hello and welcome to Digging Deep with me, Paul Harris, in which we take a deeper look at some of the week's key mining stories. And joining me today is Luke ten Hart, founder of golddiscovery.com. Luke, welcome to Kitco.
Thanks for having me.
Before we start, I must remind our viewers that Digging Deep is not investment advice, and the opinions expressed here today are our own and not those of Kitco. Luke, gold M&A continues. This week we've seen Pan American Silver, which sold its La Arena open pit gold mine in Peru to Zijin Mining for $245 million with a $50 million contingent payment possible as well. Contango Ore announced it is to acquire Highland Gold Mining at an all-stock deal valued at 51 million Canadian with a 59% premium. And also in Alaska, Treasury Metals is to merge with Black Wolf Copper and Gold. That's a deal involving Frank Juster. A lot of stuff seems to be happening, an interesting array of deals there. What are some of your takeaways from the M&A action this week?
Yeah, I think people have been asking or fighting for, we need more M&A as an industry. And that seems to be happening right now, especially over the last couple of weeks. And not every deal makes sense to me, but I have a very limited number of companies I follow. But the one with Highland Gold, for example, makes a lot of sense, I think. That company started in 2019, was really the flavor of the day, went to $3, but in the end they had 10 million or 1 million high-grade ounces. And the other company, Contango, what they did, they have a deal with Kinross and they are shipping ore to their operation. And that became their sort of new model, where they want to avoid high capex and just get a project as quickly as possible in production. And Highland Gold is there, they are in a good jurisdiction, good team. So I guess they started talking and realized that with Contango's production going and looking for new opportunities and Highland Gold's point in the decision, are we going to move this forward? Let's do it together because our Contango's balance sheet and Highland Gold's projects fit well together. And I think it's a good deal on the surface because with DSO they could ship it out without building too much of a capex.
So DSO, that's direct shipping ore. Contango, as you say, owns 30% of the Mancho open pit mine. They estimate they're going to be generating something like $50 million a year in free cash flow that they can use to develop Highland Gold's Johnson Tract, which they said some of the advantages there. It's near the ocean, so they can stick it on a boat and ship it wherever we'll process it. So the close proximity of the assets there. So that seems to be, as you say, a very good deal. With the Treasury deal and Black Wolf Copper, that seems to be less clear because Treasury is in Alaska, Black Wolf Copper has the Goliath Gold complex in Ontario. So less clear what some of the synergies or the rationale there is there.
Sometimes you have like a clear project synergy where two projects really add on to each other. Maybe it's almost like a bolt-on in some cases. And sometimes the merger doesn't make sense at first. But sometimes you see a merger, and maybe this is the reason, not sure, where you have one company with very good financing skills, Frank Juster, for example, and one company with a lot of technical knowledge for their project, but not the ability to raise the money to get it advanced. So sometimes you see a deal that doesn't make sense on the surface, but where the people doing the deal have a pretty clear plan with it, and perhaps they need somebody like Frank coming into the deal to give them the connections they need to finance that project or to move on. And we saw another deal last week like that, where I think sometimes a company almost have to do it, otherwise they get into trouble.
Well, I think an interesting thing there, Frank Juster is going into the deal from the Black Wolf side, and as you mentioned, he's got the financial connections. You spoke earlier this year about the power of networks and the importance to look out for those as an investor. Frank Juster has been doing a lot of deals, so it seems he's really positioning himself in various different vehicles for this continued uptick in the metals prices that many people foresee.
Yeah, you often see that people like that find a way to get their project forward. And if you're investing with these whales, as some people call them, the almost certainty you have is they will find a way to get it solved if there's a big problem. And in this case, I'm not suggesting there was a problem because I don't know, but maybe they realize like, hey, this is the time to really become aggressive and merge with a company that has a production company or a company that's further ahead of us than us. And this allows us to raise the money we need for both projects and really make it a better company. So sometimes the natural fit on a project level is not there, but the natural fit on a corporate group level is there to finance these things, because financing is still the most difficult part of junior miners, I think.
In the same vein, I'd like to bring in a deal that happened right at the end of last week, and that was Silvercorp announced it's going to buy Adventus Mining to get the El Domo VMS project in Ecuador. Now, Adventus has only just closed a transaction of its own. It acquired Luminex Resources, the Ross Beatty vehicle there, for the Condor Gold project in Ecuador. Ross Beatty's become a big shareholder of Adventus, and it now seems, another transaction's happened. Silvercorp obviously looking to divest out of China, and it seems I would say Adventus' CEO, Christian Carl Simard, has done a great job of navigating both the corporate side, doing a deal with Ross Beatty and now into Silvercorp, but also the permitting process in Ecuador. That must be very encouraging to see a relatively young CEO making such giant strides.
Yeah, I mean, the only thing is that I find sad about that deal is they have such a good project and they have a good team, and the team has shown confidence by buying in the market, and it almost ticked all the boxes if you just look at it. And then still they have to sell the project very close to the all-time low ever. And it makes you wonder, this is a very difficult industry. You can have a good board of directors, people buying in the market, progressing a project, getting the money from Wheaton Precious 2 years ago. But once you are going into that construction development phase, there's no way back. You have to move forward. So there's a constant need for capital. And I felt that they needed the capital so much, so quickly, that they had only two choices: either to dilute right now, to do a big financing, or to sell. And I think they reviewed all the options, and this became the best option. For shareholders of Adventus, I feel like if you think that the Silvercorp company is a good company to invest in, and they have a good plan, and maybe silver is even going to give a bit of torque, well, that could still be a good deal. But if you just look at it from an Adventus shareholder's point of view, we invested in your company because I like you and you are a good team. In that case, there was only a win for the people who invested in the last 8 months, 9 months. So these deals need to show like there must be more upside after the deal, after these companies merged. And whether or not that's true, I don't know.
I think that's an interesting point, Luke, because a lot of the transactions we've seen, rather than being takeovers, they're take-unders, because, as you say, a lot of the long-term investors have been well underwater. The only perhaps silver lining there is a lot of the deals have been have been stock deals. So you've got the advantage or potential advantage or opportunity of, let's say a bigger, better company is taking you over. Hopefully their share prices will appreciate and you'll get your money back and hopefully make a profit as well.
Well, we've seen that with a long time ago with Goldcorp taking over Virginia in 2005, and Goldcorp really went up from, I don't remember the price, but they really doubled or tripled in the years after. So Virginia shareholders already got a pretty good deal, but they could still triple their money after getting the stock of Goldcorp. So you see these deals happening and working out really well, but there's many examples where it didn't go really well. And just to backtrack a little bit, the Contango one, Contango is a fairly small company. They're issuing stock to High Gold, and they have $500,000 of volume every day. So hopefully those High Gold shareholders like the deal and stay. If they don't, then you may get a bit of selling into a pretty illiquid market. So that's of course a risk a company takes by doing a share deal.
One other thing I've noticed in some of the deals, and the Contango High Gold is a good example of that, is it seems premiums are coming back in, and some big premiums as well. The premium there is 59%. Although that sounds a lot, it's coming, because share prices have been beating down so high that putting in this case a 59% premium, relatively speaking, perhaps isn't that much.
I think both companies need to explain to the shareholders that they have a accretive deal. And indeed, we were looking at all-time lows just months ago. High Gold was at $3.50 or $3.80, I think, at the high, and now they are at 50 cents. That's that's what shareholders get offered right now. So is it an amazing deal? Yes, I think it is a good deal, considering where we are in the cycle. Could they have done it themselves? Well, that's the thing that they probably reviewed and said this is the best option going forward. But I'm not surprised to see premiums again, because companies are not willing to sell it at the absolute bottom without any incentive. You need to have a bit of an incentive for shareholders to say, this is a good deal for you. And that's why I think the premium is back.
Well, someone who's famously said he won't pay a premium is Barrick Gold CEO Mark Bristol. I spoke with him this week on the subject of M&A, and he had this to say, and I quote, "The mining industry is still short on strategy and long on reaction." What do you think of that, Luke?
Well, everybody's talking his own book, of course. I don't know. I mean, I've never, I don't think about majors a whole lot and how they operate. I just think that, and Barrick is not very active anyways in taking over companies, juniors in the first place. I think the deal last year with Hercules was one of the first ones, which was an optimistic sign for the company. So now I think everybody has to take care of their own interests, and I can imagine that from a strategy point of view, he would say that. But I think companies will have to pay premiums, especially at this point in the cycle, if they want to get, well, maybe not the best, but one of the better assets available.
Well, Barrick was supposedly in the running to acquire Great Bear Resources a year or two ago. Eventually, it didn't make a bid, and Kinross Gold obviously bought that. Barrick's also has been looking very heavily at Guyana, where there's been a lot of M&A announcement recently, although it's not Barrick that's leading that particular charge. Why is it you think that maybe Barrick isn't pulling the trigger on what the industry thinks are some of the better assets or better regions out there?
Yeah, I think companies also have learned from their mistakes. Agnico Eagle, for example, they have, at least they always get prized by saying they always do good deals, they are very patient, and they only step in when they really have to. And Barrick probably also has their own sort of strategy around how do we deal with junior miners. I cannot really judge why they wouldn't do it. Maybe it's just playing hardball. But in the case of Guyana, a Chinese company could come in and just offer a big cash deal, and that deal is off the table again. So I think it's good that all these tensions come back, because that only motivates companies to start fighting for the best projects again, rather than the juniors being starving and having no money left. I think the atmosphere in the junior mining industry is getting better. Companies can finance again, so they don't have to sell out. So maybe now is the time for the big companies to knock on doors, because half a year from now, maybe the equities have been going up so much that they can do it on their own again. So I think this may be a window where the majors become a bit more aggressive.
I like where you're going with when you say companies are potentially fighting for assets again, and we're seeing this perhaps on a big scale for Anglo American, with BHP making a bid for that. Glencore, according to Reuters, is apparently kicking the tires and looking at whether it might make a big bid there. So it's potentially happening at the top of the pile as well.
Yeah, and again, I'm a junior mining focused investor, but it's only interesting to follow these things. I don't really have an opinion about it. The big companies have to secure their future copper production or gold production. So the big majors have to almost merge to keep their production profile. Otherwise, they have to start buying juniors. And that takes often a long time with the permitting process that the juniors didn't do yet in some cases. So they need to be able to keep that line going up. And as a result, they're almost forced to do M&A or mergers of equals.
Okay, well, talking of contangos, the World Gold Council said this week that total global gold demand in the first quarter was up 3% year on year to 1,238 tons, making it the strongest first quarter since 2016. This included central bank demand of 296 tons, which he said was the strongest start to any year on record. So it looks like the strong tailwinds for gold will continue. Luke, to what extent are you a gold bull?
I don't think I am. I don't know the definition of a gold bull, if you really want to define it, but I am very active in the gold space. I own many gold juniors, but I look at the gold price a maximum of once a day and sometimes even twice a week. I look for specific situations with companies, and I'm happy to see the gold price where it's at, maybe for bad reasons in the world, but no, I don't think I'm a gold bull, because I don't think about gold as a metal a whole lot. I am specifically looking to good companies who can survive several cycles, whether gold is 2,300 or maybe for a while again at 1,800. So no, I wouldn't. By my first judgment, I wouldn't say I'm a gold bull. No.
Well, with the gold price rising up, we're starting to see, in addition to M&A, a lot of companies putting out resource updates or maiden resources. They've been coming thick and fast as well. This week, Thetis Gold updated its resource estimate on the newly combined Lawyers Ranch project in the Zijin Mining district in British Columbia. Combined measured an indicated resource of 4 million ounces at 1.5 grams per tonne gold equivalent and 700,000 ounces in inferred resources there. Also this week, Dakota Gold issued a maiden resource of 1.3 million ounces indicated and 1.1 of inferred for the Richmond Hill Gold project in South Dakota. Luke, as someone that invests a lot in the junior space, what does a gold junior have to do to be relevant to investors?
Well, to investors, that differs, of course, because it depends on the type of investor. And I can just say, like, my type of investor, I look for very specific companies, preferably companies that do not have where no analysts are following the company, where if I look on the social media, that people are not really excited about it yet. It's because I think it's such an illiquid, high-risk business that if you buy stocks that are already in favor, that's a risk on its own, because everybody has expectations, high expectations. Companies often fail because they take high risk with drilling or with production or whatever. So if the norm is they will fail, but the expectation is high, then the likelihood of losing is pretty high. So I would rather have a company where the expectations are still very low, because people simply don't follow it or have lost faith in it. And that's when I re-evaluate a company. And in general, I think in a good market, the market is more forgiving. You can buy almost any gold stock or any silver stock and they will go up. But I am more focused on the very specific stories, and I almost call them special situations. There needs to be something special. Why is a stock so cheap? Can I explain it? And can that problem be solved? And if I can understand how that could be solved and what time frame, that's when I get interested, and in most cases, those companies are very underfollowed.
How important to you is news flow in a company you're looking at or a company you invest in?
Well, since I'm looking at these sort of boring stocks that are not in the news yet, it depends what stage. I've got companies who are onto a discovery and you want to see regular updates from their field programs. If you don't see any updates or they are very late, typically it means it's bad. Because good news travels really fast. That's just almost always the case. And bad news is often a bit slower for sure. But you also have companies that are in the process of restructuring. Something went wrong, and if you look back in the last 2 years, lots of things went wrong. Not being able to finance or simply not reaching the expectation of people, and the stock just went from $1 to 10 cents or 5 cents, and there are many of those. And in those periods, companies cannot really do a lot of news flow because they just have to get their act together. I mean, do we have to finance? Do we have to roll back? Do we need new people? Do we need a new project? And what I see in the last couple of weeks is that a lot of companies are getting back to work again, but almost get back alive again. I mean, they were completely in hibernation mode. It was just only filings, like financials every quarter, but no news flow. And slowly you see news flow picking up. And the ones who do it quite promotionally or actively, you see them getting a response again. So the early signs that people like it again to invest in these things are there, I think.
I want to bring in Anglo Resources into the conversation. This is a company, as we were preparing for this, you sort of highlighted. Share price is up 15x this year, but on an apparent absence of news or other catalysts. You said that this is the kind of price action that attracts investors to the space, but in this particular instance, the absence of an obvious catalyst could be a potential concern. What are your thoughts on Anglo?
Yeah, the reason I want to bring it up, I don't own it, to be transparent. I didn't own it. I didn't know about it. And I realized recently only that they went up 15 times. So I started looking into the news flow and I didn't see anything that really, in the recent news at least, that really suggested a 15x price move. But then again, I looked into old reports that myself and some friends of mine wrote 2 or 3 years ago at conferences talking to them. And if you read it back, they had a pretty interesting story. And I'm not going to go into the story right now, I don't think we have the time for it, but very promotable. They had a couple of projects, high-grade hits, in a good belt, close to world-class operations. That's the type of story you can tell to investors and people think, oh wow, I want to have a look at that. But the stock was at 1 cent. So then I think the trick is, why are they at 1 cent? Is this still solvable? Is there still a fix? Or is this company done? Do they have too much debt and is it just, can they not solve it anymore? And apparently this company has been able to solve it. And the early signs that I saw, now looking back, is a debt settlement, a couple of financings, new investors coming in, new CEO coming in. Sometimes if you see a completely failed company, in a way failed because they went to 1 cent, they started doing all these different things to get back on track again. And then suddenly, well, not suddenly, because I think there must be a big investor behind it. These moves do not come out of nowhere, I think. But you saw these signs if you look back, and it became a 15-bagger. And some people say, oh, this is bad, Canadian markets again, promotion, maybe it's a scam. And that's problematic because people want to see these big wins. That's why we play this game. On the other hand, if it happens, people very quickly will say, hey, look at this, there's no news. This could be a promote and it's all bad. And it's not like that either way. I think you really have to look into what happened, why is the stock back in favor. And in hindsight, I blame myself for not seeing this because I think the early signs were there that this company was preparing again to tell the investors why they are still a good company. And that's what people apparently saw, and that's why the stock went up.
I think one thing that's very typical in the sector, most people don't do the work, don't put the effort in to investigate stories, positively or negatively. And so
they wait for the really obvious promote to show up. I mean, they will show up at news events again, or maybe at conferences, and sometimes you can catch these things, these 1 cent stock or 2 cent stocks, a little bit earlier. Because often when you're at the conference, the new team is already in, the financing is already done, and the company is already advanced a bit more. So if you want to find those tiny stocks, which are high risk, by the way, you will have to look before that they come out again, out of their hibernation mode. And you would have to follow all the filings to see those things.
And look at golddiscoveries.com.
Well, you have to go there, then you will always find out.
Okay, now you mentioned finance is starting to flow into the sector.
Yeah.
This week a big deal was Western Copper and Gold. They completed a bought deal and raised 46 million Canadian at $1.90. Rio Tinto exercised its participation rights to maintain its 9.7% interest, investing another $4.3 million there. Where do you see money going to in this new cycle?
Well, a couple of months ago I would have said only into the really good projects, the ones that are seen as world-class, and I don't like the term, but the really good projects, and perhaps the really good teams that have connections. They were able to raise money. The smaller ones all struggled, and even some of the better ones struggled to finance. And what you see in the last couple of months is that there's capital available again for high-risk, early-stage projects. Maybe still not like the level lower than that, but I see that companies that have a good greenfields target and can really explain that to investors and has a bit of corporate knowledge, right? A company that's not just a geo in an office, they are already able to finance again. And that's why you see all these financings now coming. So I think it already started that almost everyone can finance again. Not everyone yet. A couple of months ago it was just the really good ones. That's how I look at it.
Well, that's a big positive. Now, look, earlier this week I was at the Energy Transition Metals Summit in Washington, D.C., and I moderated the junior lithium session there, which included Century Lithium, which issued a feasibility study this week for its Clayton Valley lithium project in Nevada. 3-phase plan to produce an eventual 34,000 tons per year of lithium carbonate with a 1.5 billion initial capital cost. There's so many lithium juniors out there, Luke. Where do you start when looking at them?
Well, the point is there are so many juniors out there. I think 5 years ago there were probably 10 companies out there. By the complete fact that there are 200 companies around, that means that probably not all of them are equally good. And something similar we saw in uranium. I think there's a couple of things. 5 years ago I didn't know what 1% Li2O over 100 meter meant. And right now everybody knows that that's probably a good intercept. And you talk about hard rock lithium, then you have the brines and the clays. So it's a pretty complex market. If you just focus on the hard rock, you can compare it a little bit to the base metals, the copper, and you will understand most of it. But if you go a bit further and you go to look into the brines, well then you need a bit of knowledge. So I think also that knowledge base needs to go up, not just by investors, but also by the companies. Because if you are always a gold explorer, geologist, and suddenly you are in a company that rebrands and becomes a lithium company, then that gold geo needs to become the lithium geo of the company. And that's not something you can do in 6 months, I think. So I think the lithium markets right now are a bit slow again. So right now maybe opportunities will arise. The best and biggest companies also here will get financed because there is a lot of lithium needed. If you think that all these EVs, if it goes from 10% to 30, 40, 50%, there's no way then a lot more lithium production. So I think the lithium market will come back. And if you invest in that business right now, I think you can only invest in my opinion, in the bigger and best ones. And perhaps new discoveries.
I sort of really take on board your comments about the sort of level of knowledge needs to increase. On the sort of panel or session I moderated, I think there are at least 7 juniors with projects in Nevada, lithium clays, and all of them pretty much avoided the elephant in the room, which is the processing. All pretty much advocated some form of DLE, direct lithium extraction. And listening to them, pretty much all assuming that it will work and it will work well, which my limited understanding is very difficult, and that's not going to happen. That's not going to be the case.
Yeah, I also have limited understanding there, but I also understood that DLE as a hybrid with the old-fashioned way is good. DLE on its own, as far as I understand, but I'm not the expert at all either, is yet to be proven. I think it has been proven in smaller test scenarios, but not on full-scale basis yet. So, yeah, I should probably leave it there because that's really out of my expertise level. But what I want to say is, the bigger companies who are at the point to really do the big financing package, and if they can really prove that they have the good projects that will deliver lithium for the decades to come, those companies will get financed because there will be people evaluating those companies and give it a go.
I want to talk about the financing because just to use as a random example, let's stick with Century Lithium. Their initial capex for their first phase is 1.5 billion. They're a 70 million Canadian market cap company. The assumption, or their assumption is, they've got a big ticket price. Their assumption is the US government's going to write them a big check. An automotive company or a battery producer is going to write them a big check. And there they are. That's their plan financed. I don't think it's going to be as simple as that. I imagine construction financing is going to be a challenge, particularly over so many companies. Any thoughts on that?
Yeah, you also have to attract a complete team around it, around the construction. So I think these companies who really have a big project, if they realize that they are short in, knowledge within the company and they still have to grow it, they almost have no choice than to go with a bigger company. And maybe even the Rios and the BHPs are willing to go into the lithium space because this is a space that probably will grow like crazy over the years. We just had this tulip bubble type move. I looked this morning at the lithium price and it's just like completely like this. That's what happens. And that doesn't mean lithium is over. I think the fundamentals are great. And I think financing will be available for the best projects. I would just be careful with the smaller projects because those teams are probably new to the business and those smaller projects have the same risks for the investor than the bigger projects who probably likely can attract the right people and capital to get it move forward.
Okay, well let's finish talking about some key drill hits this week. I picked out NGEx Minerals drilling 509 meters at 1.33% copper equivalent at its Lunahuasi project in Argentina there, which extended the high-grade copper silver veins. You said that was boring and obvious, and your choice.
Not boring.
Well, not boring, but obvious. And you picked out Rupert Resources, which reported 24.4 meters at 10.5 grams per ton at its Heine South target at its Ikari project in Finland. That's a great hit and with potentially bigger ramifications, as Rupert is one of the companies in the spotlight in Finland, together with B2 Gold, Orion, and perhaps even Agnico Eagle Mines. Luke, what's going on in Finland?
Yeah, it is. This drill hole sort of confirmed again. It's the second or third one that Rupert has another discovery there, close to Ikari. So it shows how prospective the belt is. And what makes it more interesting is that Rupert has a deal with B2 Gold right now to buy their 70% of the joint venture that B2 Gold has with Orion. That deal is about to close, I guess. There was no end date there. Orion has an end date because they got a notice of a rover. So within a week, more or less from now, they will have to decide if they exercise that ROFR. Because Rupert is one of the better discoveries in the last 10 years.
And that ROFR is to sort of meet or exceed the offer on the table.
Exactly, yeah. So Orion would have to pay $110 million, $120 I think even, to get full control back onto the property. And Rupert needs to have some sort of, they need some layback because the pit shape is odd and they would have to move across the border.
It's just a few short kilometers from Ikari.
Well, it's not even kilometers. At some parts it's only hundreds of meters, but you could say a kilometer-ish. And they have been delineating gold as well, but Ikari right now is the big beast, and Rupert is finding new gold north of Ikari at Haina South. And then you have Orion discovering gold to the western side. So there's gold everywhere, it seems, and this is even though this discovery was made a couple of years ago by Rupert, 2020, you can see how quickly new discoveries are being made, and we all know that mines typically can get way bigger while they are already in production. So Ikari is already a standalone. It's big enough, it's good enough, it will be built, in my opinion. But there's so much upside left in that belt, on Rupert's ground, on Orion's ground, on maybe other companies' ground, that this is a place to stay for, I think. This is just the early days of a new camp, I think.
Well, a lot more news to come out of Finland by the sounds of it. Luke, thank you very much for joining us today.
Thank you.
And I'm Paul Harris, digging deep for Kitco Mining.